Did you realize a year ago mortgage rates were 98 basis points less than where they are today? What's that mean? Well, that's almost 1 full%. So if you're a homeowner out there, maybe trying to look to refinance, or maybe you're a home buyer trying to figure out what's going on with these things because you really want to buy a house in 2026, are rates going to continue to come down? Well, today we're going to look at the economic news we had this week. It's going to give us a precursor of 2026. Then I'm going to give you my thoughts on these short-term, mid-term, and long-term. Why do I do this? Well, my name is Dan Frio. I'm actually a licensed mortgage loan officer in all 50 states, as well as Puerto Rico. So if you're out there needing some help, I'd love to help you. But you're not here for that. You're here for these. So let's get over to it. So there was an article out this morning. It was from Yahoo Finance, and I clicked this thing, and it was basically giving me the rates for today. So it says, mortgage and refinance interest rates today, January 16th, annual rates plummet by 98 basis points. And again, like I said, that means rates last year were about 7%. Today, they're right around 6%. But here's one thing you guys face if you're a homeowner or a home buyer. When you're trying to figure out what kind of rate you can get, you find sites like this and you look at it and it's like, okay, that's great. Well, what can I get? And then it's like, okay, my current rate, I got Sage, Tomo, Mutual of Omaha, First Fidelity, this, that. Okay, here we go. Current mortgage rates, 30-year fixed, 5.86. It's a little different than Mortgage News Daily at 6.04, so maybe that's, and then down through here it says, okay, now I can refinance and the rates are completely different. So how do you figure out what rate is best for you? Well, first let's figure out what really manages mortgage rates, and then I'm going to show you some tools you can use as a homeowner or home buyer to figure out, does it make sense to refinance, or how much can you really afford? And then I'll give you my outlook on where I think these things are going to go and why. But if rates are really confusing with you, hopefully I can help you understand a little more if you're a homeowner or a home buyer. What the heck's going on with these? And why? So today, let's dig into that information. So we got mortgage news. They're saying that rates are down into the 6s or 5s or whatever. But if you look at the bond market, here's what really gives us the direction of rates. So all I want to show you is this is today's bond market. This bond right through here, if you look at the top, it's called the MBS. It's a mortgage bond. So all I want to do is show you how this works. So last year, the mortgage price was all the way down there. And now it's rallied over the past year all the way up to here. So this means when mortgage bond prices go up, well, rates come down. This is good news. So today, just today alone, we have it's up 0.01. Well, that means the markets aren't really going to do much of anything today. And the reason being is there's no data out there. So the Federal Reserve, the markets and everything look at these things over here. Now, we had some good information this week. The Federal Reserve, they control that rate over there. Don't know if you know it, but it's called the federal funds rate. It really doesn't control much of anything other than interbank lending. Right, not car loans, not mortgages and everything else like that. It's just interbank lending. But they look at these things to basically set overall interest rates. The PCE is the inflation number they look at, and the unemployment rate is, well, obviously the unemployment rate. But if you go to the economic news, we had a lot of this information this week. So let's just start at the beginning of the week on Tuesday. We had consumer inflation, and that comes to us by the route of a CPI. The C on the front of that means consumer. Then on Wednesday, we got the PPI, which is producer inflation. And then if we go through Thursday, we got initial jobless claims and continued claims. So if you look at that, we got inflation numbers and we got jobs report numbers. So let's break this down. How did it actually fare? Well, if you look at the CPI, it actually said the numbers were basically stagnant. 2.7 to 2.7, 0.2 to 0.2. So it really didn't do anything. And then if you go down to the PPI, it increased a little bit month over month here and there. But I said the January effect's probably going to take effect, where I think inflation in January alone is just going to spike up a little bit and then come back down. Basically, manufacturers and companies pushing out their tariff prices because they couldn't do it last year. So I'm expecting a little bit of an uptick, but then with energy and housing, the inflation number is going to start toppling and coming down from there. Then if you look at the jobs numbers, initial jobless claims under 200,000. We haven't seen that in a long time. And continued claims is under 2 million, which is a fantastic number as well. So if you look at all these numbers and then you look over at the Fed, you're thinking, okay, what would they do in 12 days when they meet? Well, if it's me, I'm saying, okay, inflation's over 2, the jobs market isn't cracking, and they've been focusing on the jobs market for their rate cuts. Now they're going to say, well, we're not going to do anything. We're just going to wait and see what happens. And I kind of don't blame them. So in 12 days, the Federal Reserve, there is a 95% chance that they're not going to do anything at this meeting. Now, if you look at the probabilities at the next few meetings, they're not going to be cutting for a while. So what should you do if you're a homeowner right now? If you're like 7.5% rates and you're like, okay, rates are going to come down, right? Well, I think they're going to come down just a little bit, but let's get over to here what you can do. Well, I created a tool right through here. It's called RateWatch 2.1. This thing's on steroids, I guess is the best way to put it. Put in your mortgage information, and you can choose a couple different things. But what I want you to do, let me know what mortgage rate you'd be interested in refinancing. But what the system will do is it'll trigger you when the rate hits there, and it'll go over what your payment would be, what your cost would be, what your break-even point's going to be. But it'll do a couple other things. It'll also notify you if your rate goes down 0.5%, saying, hey, let's look at the numbers. Then 1 full percent, or even if you want to save, like let's say, I want to save $300 a month, put it in there, and it'll let us monitor that for you. We don't sell the data, and that's where we can help you with. But if you're out there, you're trying to figure out if you're looking to buy, maybe in the spring, or looking to build, where are these things going? Well, check out my mortgage rate forecast. I just released that the other day. I'm basically saying mortgage rates are going to be steady right in the range that we're seeing right through now, right in the range of about 5.8 to 6.2. Okay, so we're right in the middle of that right now, and that's what I've been calling in Q4 of last year and Q1 of this year. And then I think from there on, my Q2 and Q3, it's going to be a little bit different than what I'm expecting, and that's going to come after we find out what tariffs are going to do, and then we're also going to see what happens with the Federal Reserve members at that time. So that's what we're looking through there. Now we go over to this part of the equation. What are the equity markets doing with really no news today? So it is a Cinderella story so far, and you're like, Dan, well, wait a second. Oil's in the green. Well, oil's below $60 a barrel. That's where we want it. Under $60 a barrel is the sweet spot for inflation. So across the board, we're looking pretty darn good. We go to crypto. Let's keep our finger. Yeah, crypto's up $158. So Bitcoin is up as well. So that's what we're seeing there. But if you really want to look at earnings reports right now, how healthy are a lot of our companies? Well, this week we had the financials, the banking sectors like Goldman Sachs, Citibank, and those. Let's look at the earnings reports on these things real quick before we go. If you look right through here, this is going to show green or red to see how these earnings went. If you look just yesterday, Thursday, we had companies like TSM, their earnings per share, 12%. If you look, the financials are looking pretty good. So the market's looking pretty darn good. Now, if you're out there and you're a homeowner, what should you do? Should you wait? Should you refinance? Well, we have a tool down through there, and they're all free now. Donate $1 to them. My son created these calculators. It took him actually months to do this, and they're fantastic. We're using them actually internally. I'm doing training with new loan officers today. We're actually going through some other calculators we have. We'll be posting those down below for you guys loan officers out there. But if you're out there, you're trying to figure out, should I refinance? We use this tool right here, and it's down below. Should I refinance? I think it's a lock or float or something like that. So let's go into this, and let's put in this. Let's make it simple. We're going to put in a $500,000 loan. Okay. I bought that in 2024. I'm at 7.6. We'll put it in that. I took a 30-year term. Now here's where it gets a little confusing. Right through here, how much would it cost to refinance? Keep it at $3,500. You might say, okay, that's a little expensive, but most of the time it's when you're refinancing, it's a fraction of the cost when you bought. So keep it at $3,500. Go down here and say, well, today's rate is, we'll just put in 6, okay? And you want a 30-year term. But if you waited for 12 months and you could get 5.8, is it worth it? Well, hit the calculate cost to wait button. What's going to tell you right down through here, it's going to say, and this is the average savings we have right now. It's going to say this person will save $500 a month. Yeah, they can wait, but that waiting is going to cost them over $43,000. So check out how this works. And then we also have this over here for home buyers. You're going to put in your information here, and it's more detailed than ever, but you're going to go through this. Then over here, it's not going to tell you if you can qualify for a conventional loan or an FHA loan or VA or USD. It's going to let you know if you qualify for all those and more, probably programs you didn't even know. So check out the calculators down below. And but that is our news for today, folks, because we really don't have any economic news coming out, but the news we had so far this week was pretty darn good. So mortgage rates today on the bond market, really not going to do anything. If we go to a one-day chart, mortgage rates are basically flat. Oh, no, they're up 1 tick. That means mortgage rates aren't going to do anything. They were down a little bit yesterday, right in the range that we think they're going to stay in. So if you're a homeowner out there, love to help you out. If you're a home buyer looking to build, please visit us over at the Rate Update, because we can help you out no matter where you live. Because folks, I'm licensed in all 50 states as well as Puerto Rico, but here's the unique thing about us, and a lot of people don't see this because I wait till the end to tell you, but we have basically a pretty unique situation here. We call it one application, one credit pool, and we're going to compare your loan to over 30 different lenders. How do we do that? Well, the bank I work at provides me a licensing with all 50 states as well as Puerto Rico. But the unique thing is we're set up with over 30 other lenders to be able to use their rates, their services, their products to work for you. So how does it work? Well, you reach out to me and I can control this whole process. And yes, you'll manage with me during this entire process. You're out there, you're a homeowner. Please make sure you put in your information up there. You already got a rate quote. You want to see if we can review that with over 30 other lenders? Put it in our loan estimate review tab up through there. But if you need some help looking to buy, refinance, or even build, reach out to us. We'd love to help. And all our information is right up through there. So maybe now, after all this information that we went through, you understand a little bit more. If you're a homeowner, what you need to do, your home buyer, what you should do, even if you're a realtor or loan officer, maybe you understand a little bit more about what the heck's going on with those today and why. So thanks for watching, folks. Hopefully if you're out there looking in need of a mortgage, we can assist you. Otherwise, have a fantastic day, and I'll see you here next week at the opening bell to see how this week or next week starts it again. Thanks for watching, folks. God bless. If there is a tariff news that comes out breaking, I will be letting you guys know and how that decision will be affecting these things as well. So stay tuned for that as well. Take care. Have a good one. Bye-bye.